Lebanon is in the midst of the worst economic crisis of its modern history. The country is seeing an explosion of poverty and hyperinflation. The country's consumer price index hit 264% in March of 2023, the highest inflation rate of any country in the world. Food inflation is running at above 350%. At this rate, the cost of food is almost quadrupling every year. According to the United Nations, poverty in Lebanon has exploded from 25% of the population below the poverty line in 2019 to 80% today. The country has defaulted on its debts. Banks refuse to give depositors their money. Fuel and electricity shortages are everywhere, and the country's population is falling, with people increasingly desperate to leave. Lebanon is on the brink of being a failed state, but it wasn't always like this. 50 years ago, Lebanon was considered a crown jewel of the Middle Eastern economy, and as recently as a decade ago, its economy was one of the strongest in the region. So what happened? Why did Lebanon descend into this crisis? And is there any hope for the country? In this video, we'll answer these questions, but before we get into it, make sure to hit the subscribe button to get notifications for our latest videos. And if you like this video, hit the like button and help us spread the word. In the 1950s and 1960s, Lebanon had one of the strongest economies in the Middle East. Its pristine beaches on the eastern shores of the Mediterranean made it a major tourist draw, and hotels and nightclubs were raking in the money. Maybe more importantly, Lebanon was the Switzerland of the Middle East. It had secretive banking laws that made it very attractive for wealthy people to stash their cash there. But all that came crashing down starting in 1975. Lebanon's population was roughly evenly divided between Christians and Muslims. There were slightly more Christians, and ever since the days of French colonialism, the Christian majority had the advantage in terms of political power. But after the 60-day war in 1967 between Israel and some of its Arab neighbors, Palestinian refugees began flowing into Lebanon. With this new population of refugees, Muslims became the majority population in the country, and tensions between Christian and Muslims began to rise. In 1975, those tensions turned into outright violence as fighting broke out between Christians and Muslims. The country descended into a civil war that devastated the cities, destroyed the infrastructure, and killed 120,000 people. The war raged for 15 years before a peace settlement was finally reached in 1990. The various militias that had fought the war were disbanded, except for Hezbollah, and a unified Lebanese army was formed. After the civil war, Lebanon began to rebuild, and it did very well for itself. The cities were repaired, the infrastructure was rebuilt, and over the course of the 1990s, Lebanon's economic output increased by more than 350%. But there was one downside to this, which was that much of the reconstruction was done with borrowed money. Lebanon's public debt grew to be one of the largest in the world. And there was one thing Lebanon couldn't control, which is the fact that it's located in one of the most unstable parts of the world. In 2006, a war broke out between Hezbollah forces in the south of Lebanon and Israel. The war lasted only a month, not much time compared to the 15-year civil war. But it was enough to damage the economy. Infrastructure was severely damaged, and about 1 million Lebanese were displaced from their homes. The tourism industry, which had been rebuilding since the end of the civil war, dried up once again. And once again, Lebanon began the work of rebuilding its economy from a war. Once again, it succeeded, but once again, it ran up a lot of debt to do it. Then in 2011, Lebanon's neighbor Syria descended into a civil war. Lebanon and Syria's economies had been intertwined, and when Syria's economy collapsed in the war, Lebanon began to suffer. The economic problems were made worse by an influx of Syrian refugees, 1.5 million of them, in a country that at the time had about 5 million people. Once again, the solution was to borrow more money, but that could only work for so long, and in 2019, Lebanon's economy began its descent into crisis. The local currency, called the Lebanese pound, went into freefall, or at least it did on the black market. Officially, the Lebanese pound is tied to the value of the US dollar at an exchange rate set by the Banque de Lebanon, Lebanon's central bank. Lebanon isn't the only country to do this. Many countries with underdeveloped economies peg their currency to another, more powerful currency, usually the US dollar, and there are some good reasons for doing this. If you have a weak economy, for instance, that has been destroyed repeatedly by wars, people tend not to have faith in the local currency. So pegging the local currency to the dollar is a way of ensuring stability. It encourages foreign companies to invest in your country, and it gives the local population enough confidence to save their money in local banks. That in turn gives the local banks capital with which to lend money, helping to grow the economy. But there's a catch. If you're going to peg your currency to the dollar, then your central bank has to have enough reserves of the dollar to be able to pay up every time someone wants to convert the local currency to dollars. If the central bank doesn't have the reserves, or if people believe that the central bank doesn't have the reserves, then the currency peg collapses. And that's exactly what happened in Lebanon. Since 2008, the Lebanese pound has been pegged to the US dollar at an exchange rate of 1,507 Lebanese pounds to $1. But by 2019, a black market for US dollars was emerging, and on that market, people were paying 5,000 Lebanese pounds for $1 US. In other words, while officially nothing had changed with the Lebanese pound, in reality it had lost more than 2/3 of its value against the dollar. As more and more goods were brought onto the black market, inflation began to rise. People began to panic and started withdrawing their savings from banks in order to convert that money into US dollars. It was a classic run on the banks. The banks panicked and began limiting withdrawals from bank accounts. People could only withdraw a tiny fraction of the money they had put into their accounts. Among the public, frustration and anger reached a boiling point. Protests broke out. A wave of armed robberies of banks began, but the armed robberies seen in Lebanon today aren't the usual ones. They are literally people demanding to get their own money back. As the black market value of the Lebanese pound fell and prices soared, paying off Lebanon's debts became more and more difficult. In March of 2020, the central bank failed to pay a $1.2 billion Eurobond, officially putting the country into default. This was the first time Lebanon ever defaulted on its debt. Even in the midst of its civil war, the country was able to keep making debt payments. But with enormous debt levels and an economy in tatters, government revenues were drying up and there was no money with which to pay those debts. Then, in August of 2020, tragedy struck. A giant pile of ammonium nitrate, a fertilizer, had been placed in a warehouse at the port of Beirut after the ship it was on was declared unseaworthy. On August 4th, a fire broke out in the warehouse and the ammonium nitrate exploded. The explosion leveled the port, damaged buildings as far as 6 miles, and killed 216 people. The economic damage was massive, estimated at around $15 billion. That year, Lebanon's economy produced about $30 billion of output. The damage from the explosion was equal to half of Lebanon's economy. Not to mention that the country had lost its primary port for imports and exports. In a country as dependent on imports as Lebanon is, this was a disaster of epic proportions. The cost of food and fuel soared. The collapse of the Lebanese pound accelerated. By 2021, it cost 10,000 Lebanese pounds to buy a single US dollar. Inflation reached 150% on an annual basis. But what was truly amazing about this was the total lack of response from the country's policymakers. At the start of the COVID pandemic in 2020, the central bank cut its key interest rate from 13% to 7.5%. But when inflation soared, the central bank didn't react. Ordinarily, when inflation rises, central banks raise their interest rates in order to push down the inflation rate. But Lebanon's central bank did no such thing. As inflation soared into the hundreds of percent, the key lending rate stayed at 7.5%. It's still at that rate today. It's a comical mismatch of inflation and interest rates. Nor did the central bank react to the increasing gap between the official exchange rate and the unofficial rate. The black market rate for the Lebanese pound is a good proxy for what the true value of the currency is. But the central bank kept the currency pegged at 1,507 pounds to the US dollar. With the banks paying so much less for the dollar than you could get on the street, people abandoned the banks, and in fact they abandoned the Lebanese pound. People and businesses began buying and selling things directly in US dollars. But some Lebanese businesses can't use the dollar because they are state-owned, and so they were forced to function with the fiction that the pound hadn't collapsed. Namely, the state-owned enterprises responsible for energy. These enterprises began running out of money, leading to massive fuel and electricity shortages. People were forced out of their homes for lack of electricity. They had to buy fuel on the black market where prices were very high. Many of the poorest people in Lebanon had taken to cooking outdoors on wood fires, and many others are leaving the country. Lebanon's out-migration rate has hit a level of 25 departures per year for every 1,000 people. Its population has shrunk from a peak of 6.4 million people in 2015 to 5.6 million in 2021. In April of 2022, the IMF reached an agreement with the government of Lebanon for a bailout, a 4-year loan of $3 billion. But that loan came with certain demands from the IMF for reforms to Lebanon's economy. Among those reforms was a reevaluation of the Lebanese pound so that it better reflects the economic reality. In In early 2023, Lebanon's central bank finally changed the peg to the US dollar. Overnight, it lowered the official exchange rate from 1,507 Lebanese pounds to the dollar to 15,000 Lebanese pounds to the dollar. It was a 98% devaluation, and it happened in one day. But it's still nowhere close to the market reality. By early 2023, the Lebanese pound had fallen to 110,000 pounds to the dollar on the black market, and the reevaluation of the pound only made inflation worse. In March of 2023, the inflation rate hit 264%, the highest for Lebanon yet, and the highest of any country in the world. And that's part of the problem with the demands for the IMF's reforms. While they likely would mean a stabilization of Lebanon's economy in the long run, in the short run they would mean even more pain. For instance, among its other demands, the IMF asked that the central bank and other banks become transparent about their financial situation. But that would mean that the banks would have to admit to the huge losses they've incurred in recent years as people pulled their money out and started using US dollars. But the banks don't want to do that, and they haven't. Nor has the government implemented most of the reforms the IMF is asking for. And so far, the IMF hasn't released the money it was going to lend to Lebanon. In a report from this March, the IMF said, "Lebanon is at a dangerous crossroads, and without rapid reforms will be mired in a never-ending crisis. Poverty and unemployment will remain high, and economic potential will continue to decline. A continuation of the status quo would further undermine trust in the country's institutions, and additional delays in implementing reforms will keep the economy depressed, with irreversible consequences for the whole country. The central bank will continue to lose scarce international reserves. Exchange rate depreciation and spiraling inflation will remain unabated, accelerating the already high cash dollarization of the economy. The informality of the economy will further increase, reducing the scope for taxation and further depressing budgetary spending, while increasing the risk of illicit activities becoming entrenched in the economy. Without acknowledging and credibly addressing the large financial gap in the banking sector, the banks will not be able to provide meaningful credit to support the economy. Emigration, particularly of skilled workers, would accelerate, undermining future growth prospects even further. And recently, the world got a view into another problem that has been holding back Lebanon: the corruption of its public officials. In February of this year, the Lebanese government charged the head of Lebanon's central bank, Riyad Salameh, with numerous crimes related to corruption. Salameh, who's been the head of Lebanon's central bank for the past 30 years, stands accused of embezzling $300 million from the central bank between 2002 and 2015. He's also charged with forgery, money laundering, and violation of tax laws, among other things. The charges came only after 5 different European countries began investigating Salameh's activities. Who knows how many other senior officials and bankers in Lebanon have been enriching themselves at the expense of the rest of the country. While Salameh's alleged crimes have been exposed, many others may be successfully covering up their own crimes. In the meantime, no money from the IMF, huge inflation, huge denial about the problem at the banks. A report from the World Bank at the end of 2022 laid out the situation bluntly. If the political paralysis in Lebanon doesn't end, there is little hope for the country to drag itself out of its mess. The World Bank report said, more than 3 years into the worst economic and financial crisis in Lebanon's history, discord among key stakeholders on how to distribute the financial losses remains the bottleneck for reaching an agreement on a comprehensive reform plan to salvage the economy. Whether or not Lebanon's political class can get its act together is anyone's guess. In the meantime, don't hold your breath waiting for things to improve. If you like this video, hit the like button, and don't forget to subscribe to this channel to get notifications about our latest videos. In the meantime, check out one of these videos here to learn more about the crises rocking the global economy. Thanks for watching.